Yo, what's going on, everybody? Hope all is well. In today's video, we're going to be talking about equity indices, and we're going to be talking about the US dollar and a little bit about crude oil. So let's start with equity indices. Really, for equity indices, we're gonna just see how price reacted, how we predicted perfectly what price was gonna do. So here in the Russell, uh, price came into our demand zone and then it kind of rallied. Actually, the Russell is the one that's lagging a little bit behind the other three, the S&P, Dow Jones, and Nasdaq. So as you can see, here's the S&P. Look how price got into our zone and then exploded to the upside. Same thing for NQ, for the Nasdaq. Price came into our demand zone, rallied, and then also the Dow Jones did exactly the same thing. All right, came into our zone. Unfortunately, none of the four gave me an entry signal. So unfortunately, we missed this trade, but it is what it is. There's always more opportunities to come. So let's discuss the DXY, the US dollar, which is looking amazing, if I'm being honest with you. So let's just discuss the technicals. We have a drop-based rally on the weekly. If we go to the daily, we also have a drop-based rally. This is the demand zone on a daily with these two undecisive candles. Price almost today touched our demand zone on the daily. We already touched the weekly, so that's beautiful. So now let's discuss the fundamental part, which is the most important. Let's look at the retail traders and see what they're doing. Obviously, they're extremely bearish compared to previous behavior. Look when retailers were this bearish, look what happened. It gave us uh, a lot of weeks, uh, a lot of bullish weeks. So now we're undervalued. I mean, we're under the zone where the retail traders are extremely bearish. So that's a great sign that price should continue to go up. Let's check the fund managers. The fund managers actually they're starting to buy also, so that's a another great indicator. And then uh, let's see the seasonality. Seasonality. I saw that seasonality on the daily. It looks like it's gonna continue to go up. Yep. Look, we're approaching the bottom. All right. We're approaching the bottom and to now continue to go to the upside. All right. So we have three things telling us that price should continue to go up during the upcoming days. So we know that the dollar will be bullish. So now we're going to translate that into Forex. So for example, GBP USD, GBP is the base currency, USD is the quote. So we're shorting, we're looking to short the GBP USD and the same thing with other currencies with the US dollar. So in here we have a rally base drop. Price came into that zone, touched the zone, gave us a reaction, and it created another supply zone. So actually we're inside two supply zones, this supply zone and then this supply zone, which is beautiful. All right. So all we're looking for is a break of structure on the lower time frames. We have a higher high, higher low, higher high. When it breaks this structure right here, we're gonna wait. We're gonna be waiting for the pullback, and then we're gonna be shorting. All right. So that's the same thing. For example, EURUSD, it's literally the same thing. The only thing with EURUSD is that we have uh big brother, small brother concept. We have a weekly demand, I mean supply, and then we also have a daily supply, which is right here. All right. We have a rally base drop. So So yeah, we're looking at the same thing, lower time frames, break of structure, break of this structure right here, pull back, and we're gone. All right. So let's talk about crude oil just a little bit. So we go to the weekly. On the weekly, we can see that we're in a demand zone. We have this drop base. All of this candle is the base, and then we have a rally. All right, so price came into our zone. Also, we have a daily demand inside of this weekly demand zone. So price came into our zone, it reacted, it created an explosive move to the upside, and then it created also a demand zone. All right, so we're inside a weekly at this daily, and then we're inside this also daily demand zone. So we're inside three demand zones. All right. So, and look at this beautiful inverted head and shoulders. So all I'm looking for is, well, yeah, exactly. If it gives us a lower low and then it breaks this previous higher lower high, creating a pullback and then a bullish engulfing, then I'll probably gonna be executing this trade for longs. And or also if tomorrow's candle it engulfs this candle, I'm probably gonna along this market. The only thing I don't like about this market is the users and producers. Um, let's put it on the weekly. So users and producers, when they were this bullish, look what happened. It gave us 4 bullish weeks, but and then the commercials, the users and producers pierced through this line, but then they started to sell, to short the market. So that's one thing that I didn't like. And also the retail traders, same thing, but upside down. So when retail traders were this bearish, look what happened. It gave us these 4 bullish weeks. So retailers pierced this line, but then guess what happened? They started buying, they started long to accumulate longs in crude oil. So that's one thing that's I'm kind of hesitant to take a trade because of those two things, because those are fundamental factors, especially for finite markets. And so yeah, um, let's see. Maybe this is gonna be ready for next week because I'm very positive that next week the users and producers, the COT index, the commitment of traders data for the retail traders and the users and producers are gonna be for the users and producers, I believe is gonna go up, and then for the retail traders, I'm pretty sure it's gonna be like down here. All right, it's gonna be bearish. So because just look at the what price is actually doing. It's currently dropping. So that's what I have for this week. If you guys have any questions, any doubts, just shoot me a DM or just leave it in the comment section. Cheers, guys.